E-mini S&Ps end the week pushing higher, about an 8% gain from last Friday's close, as equities seem to be the lone bright spot in the markets today. And ultimately for the week, we look over the bond market, we see yields rising about 33 to 35 basis points on the week, while at the same time we're seeing equity prices moving higher. Typically we don't see that kind of divergence. Likewise, we're seeing volatility screaming higher in the bond market. We aren't necessarily seeing that so much in the equity markets. Again, a divergence that we're not used to seeing. Something to keep an eye on. E-minis today did trade to the highs, then down to lows, then up to the highs again and closed near the highs. But ultimately, it was a very narrow range, about 46 handles today. That's the lowest, narrowest range, I should say, since January, and about 50% of what we're seeing on a daily basis in the month of March. So not a whole lot going on as far as market movement in the equity is what we're seeing other markets seeing big radical moves. Typically, that's the other way around. The risk assets typically have the higher ranges than the riskless assets, but today that wasn't the case, as we saw big moves in the bond market and not so much in the equity markets. Now, looking over at volatility, as I mentioned, volatility in the equity indices continued to decline. So we saw the VIX index moving lower. 2 weeks ago, it settled at about 31. Today, we're down in the low 20s. So it's not a significant, huge move lower, but it has been consistently trending lower as equity indices have been moving higher. The E-minis have settled 8% higher this week from last Friday. We saw the VIX index moving lower. That's a big change from what we're seeing over in the rates market, which is seeing volatility at one point today post higher than it did during COVID. So obviously there's some kind of misdirection going on there. One of the two markets may be mispriced, so it'll be interesting to see when the dust settles where they go. Is the equity market volatility rate going lower, or is it rate vol going higher? We'll have to keep an eye on that, and we'll give you kind of an update as we move ahead into next week. Lastly, let's look at what we do have later on next week. We've got a few things. We've got a GDP, final revision to GDP for fourth quarter. We've got the PCE data, which will give you one of the Fed's favorite inflation gauges. And then we have the jobs report. And obviously, that's going to be the headline, the non-farm payroll report. But given the fact that jobs haven't been the problem, yes, job news has been volatile at times. It's really all about inflation and what the Fed is going to do to try and slow that inflation. They aren't too concerned about the job market at this point, and likewise, we'll continue to talk about inflation as being the key. And with expectations now for the Fed to raise upwards of 200 basis points more in 2022, a lot of interesting things can happen, but clearly we need to see those jobs numbers come in on the strong side in order to give the Fed that leverage to be able to raise rates more aggressively as they want to help stem inflation. So the E-mini S&Ps, another big week higher, moving 8%, ending Friday on the highs as volatility moving lower, and we're seeing a completely different picture over in the bond market.